Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with December 5th report for you to use this weekend for the December 8th stock market session on Monday. We had a very nice rally today. The only problem with it, as you can see here, look closely and you'll see that volume was just slightly above average on the S&P 500, which kind of doesn't give a whole lot of confidence in this rally right now because everybody wants to be calling a bottom off the November lows. But clearly, if you look at the volume in September and October, if we're talking about capitulation, that's what it would look like. Possibly the November lows are the bottom. Anything can happen in the stock market. Anything and everything will and can happen. But really, honestly, if we really look at the technical analysis of how it looks, the index is still below the 50-day moving average. 200 and 50-day moving averages both in a downtrend. Price is not rallying on heavy volume, and in fact, volume is contracting. So I wouldn't be too quick to pull the trigger and go 200% to 400% on margin right now, thinking that the bottom's in. It just doesn't look like it. Let's see maybe if the Dow Jones showing anything different. Once again, nothing there. It is right at the 50-day moving average. If it can take out the 50-day moving average, I believe it would be good for a bear market rally. But since volume is not large on these up days compared to, like, say, in September or in November, a few of the days, we're initially off the bottom for the Dow Jones, but the Dow Jones leading is not the proper index to be leading. You want to see the NASDAQ 100, SP 600, Russell 2000 leading, and they're not, so that's not good. Now let's look at the NASDAQ 100. As you can see, it's right there, getting close to the 50-day moving average again, and look at how below average volume is. Volume is well below average, just like it was 2 days ago when it rallied 3.2%, and besides the actual low of 1121, volume has not been above average on this index since then. And that is being confirmed with the NASDAQ. I mean, let me see about the day right after that. Nope, it is lower. So besides the actual low of 1121, which the volume was still below the lows of September and October, volume's been below average on this rally. So I don't know how anybody can be happy, especially when certain stocks that were setting up right. Let's go back a couple days so I can show you one, for instance, that was setting up okay. DMND, not looking too bad, looking really nice, strong uptrend, a lot of max green bump, strong accumulation, and then, whoops, destroyed in one session, just gone, destroyed, done. As you can see, volume's pretty huge, and as you can see on 8 and 9, let me go to a monthly, completely looks like it's topping on that short-term radius. So that's why you got to be very careful right now in the stock market, and going long even in the ones that look the best isn't safe. There's a long that we went long recently, or a stock we went long recently, I apologize, and it's not going up either, and the market rallied 4% today on the S&P 600, but yet this stock was down today. Still had a nice, beautiful tail, still looks strong, but just odd, unique. As you can see, the S&P 600 coming up to the 50-day moving average once again. I have to look at the IBD, Investors Business Daily newspaper, to see the volume, since Telechart for some odd reason doesn't have volume on these indexes. I don't know why. And you see Russell 2000's right there. Like I said, gets above the 50-day moving average, we're good for a potential short-term bear market rally. If it doesn't, there's no way we're going to last. So for a bottom, I just don't think so. For a rally, absolutely. If I would think that we were at a bottom, you would see this October volume day of 1010, also in September 919 and 918 right about now, with the 4% and 3% gain that we got recently. Let's look at the volatility index. See if it's breaking below the 50-day moving average yet. No, it still shows it is, but it has a little tail on it, still above the lows of November, so I wouldn't get bearish on the VIX, which would mean bullish on the market just yet. Things are still holding, and that's why there's no reason to really pull the trigger on any long or short right now in this exact moment, because the market's kind of consolidating, as you can even see here on the VIX, the past month and a half to 2 months. Now I want to look at some commodities really quick. Let's look at platinum first. Platinum is still in its consolidation range below the 50-day moving average, so it could still resolve itself even lower. And normally, whenever you have a big downtrend like we've had with a short consolidation that does have a hint of rolling over to it, it normally doesn't last. Let's look at silver to see how that looks. Same thing. It looks just like platinum. Let's look at gold. And as you can see, gold, 1, 2, 3, 4, 5. The past 5 days, gold is actually down 7.97%. And since everyone was screaming and telling you that you have to be long gold or else you're going to lose a ton of money, has lost 23% since July 15th. So if you listen to everybody on the TV, radio, and on the newspaper and internet, and you went long gold like they told you to, you're now down 23%. While during that exact same time, the dollar, which everybody told you to sell, stay away, avoid, don't even come close to it, it's going to crash, during the same time is up 20%. And since it even broke out of the flag pattern, even though it did come back to test its support near the 50-day moving average, as you can see, it's steadily climbing higher, and we have tails. Now, recently, the past 3 days, it's shown some resistance near the old highs, and that's why we have these big long tails on the intraday chart. However, until we break below the low here, which is 86.10, I'm not going to get worried about the dollar just yet. There was one other thing I want to show. Oh, that was oil. So let's look at oil. As you can see, oil is crashing. In July, it was 145. It doesn't even, there it is, 146, 146.65 it shows. But to be honest with you folks, it hit 147, I do believe, on the contract. So I don't know what's wrong with TC. But since the high in July on Telechart to the low now in 40, oil is down 72% from July 11th to December 5th. So if you went long oil around 140, believing it was going to 200, you are now completely broke in futures, especially if you have anything over 5-to-1 margin. If you have over 5-to-1 margin, you now have a 300% loss. Congratulations. Oil at 40 starts to help the consumer, but the amount of debt out there is so huge. The bailout is over $4 trillion added up for all these banks and automobile companies if we do it. The only thing that comes close is World War II. Even if you combine World War I, the Korean War, Vietnam War, the Marshall Plan, the savings and loan crisis, the Louisiana Purchase, you can still come up with a number less than what it's going to cost us taxpayers to bail out these stupid failed banks. When Lehman Brothers goes under and they take the money and they pay out a $172 million bonus to an executive, I'm sorry, there are problems in the system. So even though oil's at 40 and gas is hitting 125 in some areas, and there's talk of gas going below 1, just the fact that we're talking about gas going below 1 probably means that we're not. So I would assume that we're near a low here in oil. I don't predict bottoms. 40 is extremely cheap. If we go to 30, that would be incredible. I would be happy. I would think that that would act as a major tax cut to the consumer, because if I go to the very end of 2004 and go to now to oil, I'm down 4%. So unless you bought oil, let's say if you bought oil at the end of 2003, you have a 52% gain. And if you bought it around mid-2004, you have about a 15% gain. And if you bought it at the end of 2004, you're just SOL right now with a loss. So the other index I want to show you is the Chinese stock market. What Telechart does not show you that Bloomberg charts will. If you go to the gold forums, if you are a platinum or gold subscriber, you can go to the forums and look at my number 2 helper on my website posted a chart of the Chinese stock market from his terminal that has volume, and you can see since the November lows and even during the September rally, volume has been large on the up days and low on the pullbacks. Now, I would love to see some stocks in the Chinese stock market to see how many are near 52-week highs, but we don't have anything that can do that right now. So I'm going to go ahead and wrap it up there. I'm going to have a part 2 and maybe a part 3 if I go too deep into part 2 this weekend. Thank you, everybody. I hope everybody had a great week and have a great weekend. We'll see you on Monday. Aloha.